We are back after a busy month of end of summer activities, and maybe the market will be back soon too. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, August 15th. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos so you can know how the market is impacting your options as a home seller or buyer. Starting off, we'll look at how the market performed this past week. There are 65 homes on the market, one less than last week, with an average asking price around the same at $1,859,000, down from $1,867,000 last week. 6 homes went pending, 2 less than last week, and the average asking price on those pending homes dropped a little as well, down to $1,987,000, down from the $2,118,000 we saw last week. And again, fewer homes closed this week than last week, but the average closing price increased significantly from $1,841,000 to $1,986,000. So that's how the market performed this past week. And next, I always like to look at how the indicators that show us how the market might be moving forward. But before we do that, if you find this information helpful, you can hit the subscribe button down below so you don't miss out on future updates. And while you're at it, why not share this with a friend also? Everyone deserves to be in the know about their local real estate market. Okay, let's look at those indicators. After peaking in the mid-80s a few weeks ago, up here, inventory level has settled back down to the mid-60s range that it's kind of bounced around since the middle of spring. It's not unusual for inventory levels to peak right towards the end of summer vacation and then see it creep back down. At this point, I won't expect inventory to fall significantly unless sellers who haven't had luck finding the right buyer decide to pull their house from the market and try again another time. With the inventory levels falling back down, down to the mid-60s, I should say, over the past few weeks, the turnover rate has improved from its very anemic 25% a few weeks ago. It's still rather soft at only 50%, but any improvement is a good sign. The over-under continues to land in the under range as the market struggles to get back to a healthier turnover rate. This is the longest stretch that the market has stayed in the under range since spring of 2022. With the turnover rate staying well below 100%, I think it's unlikely that we will see the average closing price increase anytime soon. Or the over-under, I should say. The average closing price did improve this week. Even with most of the indicators this week moving or staying in a down market direction, we saw a bump in the closing home values this week. This stat does need to be taken with a grain of salt and really needs to be understood in the greater context of the market. A few weeks ago, we saw the average price drop $200,000 in a couple of weeks. And now we're up $63,000 in just 1 week. This doesn't mean that the average home in San Ramon has increased in value $63,000 this week, just like it didn't mean that a home lost $200,000 in value a few weeks ago. This average closing price is prone to big swings in a slow market like this since the sample size is so small. Anytime a group of smaller priced homes sells, it'll drive that average price down really quickly, and the inverse is true. All that being said, it's good to see that the average price moving back up. It means that some of the higher priced homes that have been sitting on the market for a while are finally getting into contract and now are selling. The Triple Q Fund grew another 2% this week after the large dip it saw in April. That dip came with the first talks of tariffs and the overall economy getting a little nervous about what might be happening. That market is quickly creeping to the $600 range and has been significantly improving since April in a pretty stable upward trajectory. The solid growth will lend to buyer confidence in those who are in the tech industry and have a lot of their funds they plan to use for down payment tied up in the tech side of the market. The hard part is that since our area is so tech heavy, the recent layoffs with all the bigger firms does add a little hesitation to the buyer pool. Because while their stock funds are growing, they do have that nagging fear of job loss. So this indicator is not as strong of a positive for our market as it usually is when the fund is growing like this. The interest rates do lead to a little more positivity in the market this week. The national average is down to just over 6.5%, the lowest it's been in over a year. This comes in the midst of a verbal tug of war still occurring between the Trump's White House and the Fed. It is unlikely to make that we'll see any real headway in interest rates coming down significantly, but if it does, I still hold to the idea that home values will start to climb quickly as borrowed money becomes more affordable. But who knows when that will happen. The end of summer tends to be the time of that the market really starts to slow down and gear up for the winter hibernation period. That holds true in today's market as well. But we did have a pretty solid week regardless of that fact. Inventory came back down, helping to improve the turnover numbers. And maybe now that kids are back in school and routines can get back to normal, we could see a little bump in the activity before the summer truly ends. If interest rates do adjust significantly, soon, we could see a small flurry of activity before the fall and winter season really settles in on us. Thank you for joining me for this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the bell so you know and can stay informed on how the market is shaping up this year. And if you have any questions about how you can navigate the stressful, confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Have a safe weekend. We'll see you next week with a new update.